Welcome back to another episode of Insider Knowledge. My name is James, and today I'm going to be talking about what happens to your pension fund in the event of your death. So, you live overseas, let's make that assumption, and your pension is currently in the UK, let's make that assumption. What are the options and what can you do to ensure that your pension fund is handed down to your beneficiaries in the most tax efficient way? Well, first of all, you have to understand the new rules that have applied in the UK. What they actually say is basically if you're under the age of 75, then you can access or leave your pension fund upon your death to your beneficiaries completely tax-free. Now, that is a slight rule change and it's hugely beneficial to you. It doesn't matter whether you live in the UK or live outside the UK, the fact is your beneficiaries will get the funds completely tax-free. But what happens if you're over 74? Well, until April 2016, the pension fund will incur a 45% tax penalty, but only if you're over 74. So what are the other options then? Well, after April 2016, the rules will change again slightly, and if you're over the age of 74, then you'll be in the position where the beneficiaries can select to either pay 45% tax on the funds, or they can actually take the funds and pay their marginal rate of income tax on the proportion of the funds which they're taking. Now, that could be hugely advantageous if your beneficiaries are also living overseas. What about QROPS as an option? Well, QROPS is actually better if you're over the age of 74 at the moment because you're able to send that to your beneficiaries completely tax-free still. Under 75 though, there's no advantage whatsoever of QROPS anymore because the 55% death penalty has been completely removed. So, what else can we consider? Well, when we're considering things like this, then we also have to consider the country which you're living in and the country that your beneficiaries are living in. Now, many people talk about death taxes as only applying on the pension fund, whether it's in the UK or whether it's outside the UK in a QROPS. And the reality is, what you actually have to be concerned about is where your beneficiaries are actually receiving the money. There are many countries in the world that will tax that money upon receipt. Now, the list is too long to actually put up now or for me to say, but it is available from us if you wish to contact us. Suffice to say, simply trying to avoid death taxes or simply trying to avoid UK taxes, you could put yourself in the position where your beneficiaries pay just as much tax in the country they currently live in. So, what else do you need to consider? Well, there are quite a few things with pensions that you need to consider, but to be honest, it's too much for this one video. So what I'm doing is making a series of videos about all the different subject matters to do with pensions. So for now, I'd like to thank you for watching Insider Knowledge. Feel free to visit our website where there's lots and lots of information about all of this. Feel free to contact us for advice, personalised advice, which we're happy to provide to you. Please rate our video channels and please come back and watch the other videos. I look forward to seeing you again soon.